So, hey guys, welcome back to the Fibonacci Swings. This is Overker, and today we are analyzing of GBP JPY. I analyzed this pair around 1 month ago, and today I would like to try something unique. That's I will record my sound in another device. That put I will merge it, and then I will upload this. So I think that can improve my sound quality because my sound quality is too bad nowadays. Okay, so I was likely to do that. So reacting to the top down analysis, we see that we have swept out this liquidity, reacting with this fair value gap. That's on a weekly time frame. There was a fair value gap here. Now prices swept out that liquidity. We have broke that low in the daily time frame. We got two imbalances here. So first one imbalance, we are able to find it here. That's roughly around this level, and the second one is below that where I have marked, that is 192.697. That's actually a fair value gap that I'm looking forward to. See, there are two fair value gaps, so people will just mark out this fair value gap. But recently I studied one thing. See that this fair value gap is formed after rebalancing this fair value gap. So this one is not that much important, but this fair value gap is in the move, and we have seen a closed candle, opposite closed candle here, making some sort of order block. So now I'm expecting that price can go up to this fair value gap. That is where in the second fair value gap we are able to see in the video. One would not, because that's actually breakaway gap, so maybe that fair value gap will not be mitigated. So in the sense that this fair value gap mitigated that 1195, if price go to this fair value gap, then you need to follow the structure, because in the daily time frame, if you see a daily fair value gap, you actually need to enter on 1 hour fair value gap. So the time frame alignment works like this. So this is the daily time frame. So we see a fair value gap here, so we will move price move on to this level. So we will wait for the 1 hour fair value gap or order block or structure shift to form. So we will not enter directly on that 1 hour fair value gap. We will wait and enter upon the 5 minute fair value gap, so that we can get a confirmed entry and we can target the billow's liquidity. Okay, so this is how the structure will work. Daily to 1 hour. Daily is like main the point of interest. 1 hour is context and 5 minute is for entries. 5 minute is for entries. So this is how the pure structure will work. And as of now, we have two fair value gaps. But why the second one is important? The below, that is around 192 level. So I have told you that this fair value gap is formed in the flow, and this fair value gap is formed after the rebalancing of the previous fair value gap. So uh, this makes this fair value gap not so interesting, because it has already in the balanced range price, but this fair value gap is not in the balanced price range. That means this fair value gap, which I have marked here, is more likely to be respected. So now, this value gap has more likely to be respected because it's in a flow. So now, how do we enter here? So we have followed the two things. So example, when price reaches about this area. So imagine when price reaches about this area, you need to shift to the 1 hour time frame. Okay, you will shift to the 1 hour time frame, and in the 1 hour time frame, you will find something very crazy. So let's see. This is how the price look like. This is high, and there are some like equal highs above. So there is a liquidity present here. So I would suggest price will go purge out the liquidity with a daily fair value gap, two context mixes. So this will give some sort of reaction above. Then price will react to that fair value gap, coming down, giving us a shift of structure in the 1 hour time frame or in the 5 minute, 15 minute time frame. Price reached there. We got a 1 hour fair value gap around this area. So after this 1 hour fair value gap, we would zoom into that fair value gap here, fair value gap. We will not directly enter on the fair value gap. So we will do just one thing. We will wait for the price to go upon this level. We will wait to price go upon this level and entered here, not directly, but after some sort of bearish confirmation. So like price goes up here, price gives some downward momentum, upward momentum, and then we got a shift. So we would enter likely to here with a very tight stop loss. Stop loss would be the 1 hour fair value gap high. and we will target these lows which are around at uh, 190, so that how much we will get to the risk to reward ratio. So like we were entering here, my stop loss was around about this area. I would target this below area, so I would just like to get a 1 is to 10 risk to reward. So that will be not stable, so I will just increase my stop loss to the 1.6.92 RR. Although if you are really want to care about, you can just do 1 is to 2 or risk to reward. That's also good. So many traders are doing that. But if you just want to increase going with the flow, you can just book partial in the 1 is to 2 risk to reward, and trail your stop loss to the break even, and just ride the trend until you reach up this level, or you can just target these lows of the dailies. So it's your choice also. Okay, so now we have the context clear, bias clear. So this will be my next week plan. See that I don't trade very usually, because there is some sort of like, if I got a setup form, so I will just do that. If I do not get the setup, so I will just wait. So remember, on the GBP, on the JPY pairs, Monday is likely to be against the trend. Tuesday will be likely to be the consolidation. But the main thing happens is upon the Wednesday and Thursday. And Friday will be likely to like more sort of uh, like consolidation. So I would recommend you to trade upon the Tuesdays, because Tuesdays are very good to trade, and Wednesday is likely to be follow that trend, and Thursday is likely to be going into the that flow, but Friday will be like consolidation. So Friday market will literally kill you. So do not trade Mondays, do not trade Fridays. If you really want to trade, trade Tuesday, Wednesday, Thursday. These 3 days are enough. Okay, so Tuesday, Wednesday, Thursday, these three these 3 days are enough to make you profitable. So why has to you ruin so much time and like energy to just do analysis? So just do that simple. So let me tell you the example. So where is that? Here. So let me go to the. This is Friday, Sunday, and this is Monday. Okay. See that Monday was likely to be consolidated, like smaller structure. So on the Tuesdays, you can see that on the Tuesday we got shift something like above and then down. How much we got in the Tuesday? Let's calculate how much pips we got in the Tuesday. So in the Mondays we got almost 100 200 180 pips. But on the Tuesdays, how much pips we got? We got almost mm, 243 pips. That means trading Mondays will be likely to be just hitting your foot with the axe. So I would recommend you to trade the Tuesdays, Wednesday, and Thursday. These 3 days are literally best days to trade. So this is how my plan for the next week. Hope you like the video. Subscribe my YouTube channel and get some really updates, really amazing stuff on the weekly analysis and weekly wrap up. So this is how you can capture really easy 1:7, 1:8 setup. Thank you. Bye bye.